With CPI looming over us tomorrow, I want to just go ahead and express or heed warning here to my beginner traders and or my master students to avoid trading the markets when CPI or any of this macroeconomic data comes out, right? So just, of course, I'm not a financial advisor, do as you please, right? But I would love for you to maybe consider otherwise. Okay, you guys. So let's go ahead and see what the SPY has for us in the coming day. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an SPY technicals, raw price action, and maybe some statistics here and there. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, so yes, we are looking at the SPY on the daily chart here, and just for the people who haven't actually been following my analysis, this is a macro scale broadening descending wedge that we have been riding since the beginning of the bear market cycle, right, in early 2022, end of 2021, right? So this presents anxiety in the trade. So we are in the process of making a pretty interesting breakout with a smaller term time frame broadening descending wedge, of which we've already seen the upside from several days, prior to today. Right, so I would like to give you right now the dates, right? So tomorrow at 8:30 a.m. Eastern time, the CPI report will be released, right? So now, in respects to the inflation, the current rate that we're at right now is 6%. Okay, the expectations are a 5.2%. Now, remember that the Fed is actually trying to get us back down to the overall level of about 2%. Okay, so of course, we're still way above. Inflation is still very much up there. So we still have a lot to kind of consider here. Okay, you guys. So although the markets are still kind of pricing in a potential pivotal point here, there is also the possibilities of sell-offs too. Okay, but I'm not saying that it's going to sell off. What I'm saying is that we have to be ready for things like that, okay? Because I don't know what the Fed is going to say. And actually, it's even the professional analysts can't even guess what the Fed is going to say. It's because they're reactive to the data that's coming in, right? Not historically. Okay, so just remember that just to be honest with you, 5.2, of course, yes, it is kind of a bit of a jump here from 6%. If we get like a 5.4 or a 5.5 or even a 5.3 where it doesn't actually meet the expectations, of course, we can actually slightly sell off and then come and then bounce right back up, because the idea behind this is that, yes, inflation is still kind of controlling, right? Meaning that we are still going down, but it didn't quite meet the expectations. So yeah, we can maybe sell off a bit, followed by a bounce to the upside. Okay, you guys, so if we do that kind of move to where we actually just make a 5.3, 0.4, 0.5, somewhere around there, then there are two critical supports to kind of keep an eye on. Okay, so that would be about 406.73 and or the range between 401.76 and 403.26 before a shakeout bounce to the upside. Okay, you guys, so now here's the other situation. If we do get 6.1 or 6.2, or even a 6, then the markets can react very negatively. Okay, so in that situation, if we are not moving down in the CPI reportings or the inflation report, then there could be a deeper capitulation event. Okay, so now if that is the case, then there are several targets for us to kind of keep in consideration here. Okay, so particularly this here. Okay, so let me just go ahead and draw a box here that would essentially serve as a pretty important area for us to consider, okay? So that would be the space of about 395.27 to 396.24. It would be very likely for us to start capitulating to that area there if we don't see a good read. Okay, you guys, so there is an immediate danger here to the longs if that is the case. Okay, you guys, so please remember to maybe consider staying as safe as you can, because this is, realistically, this would be the continuation or a bounce zone to test the area of about 401.76 before a continuation to the downside, of which we would eventually reach at about 384. And why 384? Well, if we start looking at this formation here in an upper term time frame, like a 3-day, then you could actually see that it would be pretty fair to look at a retest of our newly converted resistance of the broadening descending wedge into support before continuing on to the upside. Right. So, I mean, when you're looking at it in larger and larger time frames, it looks like it could be more and more likely for us to do that. I mean, these are 1, 2, 3, 4 candles right here. What's another 3 candles to the downside before a continuation, right? So, but remember that these are macro candles here. You're looking at 5-day, 5 days per candle here. So it would, kind of take a long time for us to repair. So now if we do get a pretty good read saying that we do, say, for example, we did meet the expectations of 5.2%, very, very likely we can actually meet our upside target of 417.02 that we've been looking at for quite some time. That range would actually be between 417.02 to 418.27 before actually facing an immediate retracement back to 411, as our current highs would be serving as a newly converted support, right? So that support of about 411 would then actually encourage us to continue onwards and upwards. Okay, so those are the situations that I'm kind of looking at for the SPY over the next trading day. Please remember that it is going to be very volatile. Okay, you guys. So I need you to be very careful. Another thing that I need you to remember is that I'm still offering a few. There are still a few seats left in my ArcMasters trading course that's going to begin in the 3rd week of April. Okay, you guys. So this is going to be the last one that I'm going to offer. I will no longer, or actually, it'll probably be a very long while before I consider coming back into teaching again. But this is the last one that I am going to offer. Find the Gmail in the description below. Send your inquiry, and we'll get you enrolled, right? So we'll go over that, the price points and everything, okay, you guys? So please remember, first and foremost, though, that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. I need you to do your own due diligence, and everything will be just fine, okay, you guys? But in reference to momentum within this, then there is, everything is still kind of pointed to the upside in reference to momentum here, okay, you guys? Some very, very small term time frame resistances here and there, but it's normal for us to face this when breaking upside of key areas of resistance, okay? So we are at a key support now. Okay, you guys, so we would need to validate or continue validating that 408.91 as a valid area, or 408.85, right, as a valid area of support before continuing on to the upside. So in the early pre-market, very likely we can actually start touching down within this area here before a continuation, if it is, up to the, if it is that we get some good economic data, right? So upon that testing of this of this support, and then upon that weird reads and stuff to where we get not quite the expectations, then we could face some actual capitulation. Shaking, it would be a shakeout here or a spring before a continuation to the upside. But all of this, expect high volume, okay, you guys? So it's going to be high volatility here, and this could essentially have you bag holding, okay? So I would need you to be extremely careful with what's happening, okay? So what's a little bit indicative of testing this support range is actually the 4-hour. Okay, we're well within that gravitational zone. We could definitely actually face a little touch right back here to the 58.70, and then actually move on to the upside. Okay, you guys. So we are consolidating in this point here. You can see consolidation all throughout these 4-hour iterations here is in respect to the CPI data coming out. Okay, you guys, so please be very careful, and remember that the CPI reporting will be at 8:30 a.m. Eastern time, okay? And these are your metrics here once more, okay, you guys? But with that said, I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.